Why does the Fed, and do you agree, that the policy is actually restrictive enough? When you take a look at financial conditions, they are so loose. So what gives them the confidence to say policy is at a restrictive enough point?
Well, there's this hypothetical thing they have where they look at the neutral rate, they look at the policy rate relative to that. They say we must be at a restrictive setting. Lots of bond people will also look at real rates. So if you look at your, tips imply your real rates, or you look at a nominal yield minus some measure of inflation, it's positive now. It's been negative for quite some time. So people think that's a restrictive. I'm a simple man, so I just look at growth, inflation, the unemployment rate, and I think the jury is still out, Alex. It's TBD whether we're actually that restrictive. I just got back from Europe. I was in Germany. A lot of clients over there asking that question. And one thing I said was, hey, maybe interest rates are just going to take more time to bite. The U.S. consumer is more insulated from rates. We've got 30-year fixed mortgage, for example. Many of my corporate clients, they've termed out their debt and they're earning income on their assets, their savings that they've accrued. So they're actually earning income at higher rates here. So maybe they're more insulated from the interest rate increases that we've seen. So the U.S. economy is very resilient. I think it's tough to make the case things are very restrictive at the present.
Jeff, we had some ISM data come out earlier this morning. 49.2 was a headline number versus a consensus of 50. We had Tim Fury, who heads up the ISM, saying he's not too concerned about it. It's a data point. How do you think about just kind of the overall economy here today? Is it strong enough from your perspective that the Fed, in fact, can just kind of wait?
Yeah, it is. I got excited when we jumped back above 50 on ISM. We've been lingering below that. I got to admit, that was an exciting moment for us. We did a chart of the week on that. But probably the most worrisome aspect of that ISM, Paul, prices paid.
Yeah.
Correct me if I'm wrong, but I believe they leapt back up to 60.9 on that gauge.
Right.
So again, maybe the real story here is, we've had some manufacturing weakness for some time, so that's not really new. But the resurgence of some price pressures, that might be the real story here. And that's consistent with some other price gauges in Q1.
Right, and that's something that the Fed can't do anything about. Like if that's a commodity pass-through thing, and even if it stays higher, they can't do anything about that point, in essence. Here was my question from earlier. If we don't get a cut this year, could that be seen as a de facto hike?
Well, it's definitely a tighter policy than financial market participants had anticipated, at the start of the year. I remember on this program in January, we were talking, I think there was 150 basis points of rate cuts priced in. That definitely had an impact on financial conditions, whether you're looking at a 2-year yield or a 10-year yield. So the consequence of the removal of those rate cuts is, tighter financial conditions across the board. But I just keep coming back to it when talking to clients. It's happening for a good reason. It's because growth is holding up. The economy is more resilient. We're talking 3% growth. That's not a terrible environment. I guess if we went back, 5, 6, 7 years, and I told you we wake up in 2024 with 3% growth, 3.8% unemployment rate, a little bit higher, 3% inflation, you would take that deal, I think. It would be okay for corporate earnings overall. So I don't know that it's a disastrous scenario here. It's disappointing if you expected a lot of rate cuts, which we did not. So not too disappointed.
Jeffrey, how about the U.S. consumer? We're going to get some earnings starting next week from some of the retailers. How do you think the U.S. consumer is doing out there? Because there's a lot of crosswinds out there. It's tough, but certain parts are doing okay. How do you view the consumer?
I think, I talk to a wide range of clients, and some of my clients tell me, hey, I don't care that inflation has cooled off, Jeffrey. It was 6% on this core measure you're talking about. Now it's 3%, big deal. Prices are still high, Paul. That's what they tell me. It's the price level that I think they're referring to. That's the term we would use, right? And so that's still, I think that's still weighing on a lot of consumers. There are consumers that are seeing pretty good wage gains, but not all. And we think you're seeing that show up in some areas. So we're seeing that in credit card delinquencies. We're seeing that in some of the auto delinquency numbers. So it's something we're watching very carefully. I have to tell you, though, in aggregate, when I see aggregate nominal consumer income still growing at around 6% year on year through the latest month of data, that is pretty good. That can smooth over a lot of the other problems that we see out there. So some signs of weakness, but overall, U.S. consumer is in still great shape, I think.
So before we let you go, it is the question, Jobs Day Friday, what are your numbers?
I think reasonable guess is somewhere around 200,000. Wouldn't be surprised by that, which would be great. We think you only need 110,000 jobs to keep a lid on the unemployment rate. So that should keep some downward pressure on the unemployment rate. Another great month of job growth, I think. So we're expecting pretty solid growth to continue here in the April data.
All right. Jeffrey, thanks a lot. We appreciate it. I hope for your sake that it is not a nothing burger, that you can get excited. It does feel like Jay Powell would like it to be a nothing burger, so we'll see if that actually happens. Jeffrey Cleveland, chief economist at Payne & Regal, is standing by. Here's my other question. If we take a look at the earnings that we got, right, from Starbucks, from Yum, from McDonald's, I mean, I have the list here, like you name it. Obviously, the lower end consumer is under pressure. Even Kraft Heinz, right? You take away that organic volume, and that really is struggling. Marriott, for example, as well, even Estee Lauder, you look at high-end makeup, the U.S. was pretty flat. What constitutes bad?
Yep.
Like, what softness is okay for the Fed, and then when does it become, look, we have a real portion of the economy that is really, really struggling?
Yeah, I think one of the data points they're going to look at is the labor market. And again, people keep falling back on, which I think with good measure, is that the labor market is still relatively very strong. And as Jeffrey Cleveland was pointing out, with some wage gains associated with it.
You know what's interesting is I was speaking to a friend of mine who is in the tech industry, and she does like data stuff. So the best I got, data stuff. And she was saying that there had been so many layoffs in the tech industry that people are just not getting jobs. Like it is so hard. Like you have to know somebody in high rank to even get in the door. Yeah, and in some ways it didn't surprise me. In other ways it's like, oh, right, because it's not the hiring spree it was a few years ago. Anyway, the Fed Special is coming, so don't miss it. Complete coverage of today's Fed decision. It's a special edition of Bloomberg Surveillance. That starts at 1:30 p.m. Eastern on Bloomberg Radio, Bloomberg Television, and YouTube, so stay with us for that. For now, let's go to John Tucker with World and National News. John.
All right, Alex and Paul, tensions boiling over on college campuses where pro-Palestinian protests have been ongoing for the past 2 weeks. In Los Angeles overnight, pro-Israeli and pro-Palestinian protesters clashed violently. And hours earlier in New York City, police arresting protesters at Columbia University and dozens more at the City University of New York. Mayor Eric Adams says the student protesters were being led by external actors.
We're going to protect our city from those who are attempting to do what is happening globally. There is a movement to radicalize young people.
Columbia's president says she asked police to clear all the protest encampments and maintain a campus presence through at least May 17th. Secretary of State Anthony Blinken continuing his push for a ceasefire between Israel and Hamas. He met in Tel Aviv today with the Israeli president and called on Hamas to accept Israel's terms for a pause in fighting in exchange for hostages.
We're determined to get a ceasefire that brings the hostages home and to get it now. And the only reason that wouldn't be achieved is because of Hamas.
Secretary Blinken says the release of hostages in Gaza is at the heart of U.S. foreign policy. The closest abortion clinic for somebody living at Florida's southernmost tip is now a 14-hour drive away in Charlotte. The 6-week abortion law signed by Governor Ron DeSantis last year and confirmed by the Florida Supreme Court earlier this month takes effect today. And 2 Republican hardliners announced today they're going to force a vote on ousting House Speaker Mike Johnson, a battle they're likely to lose while inflaming animosity in a bitterly divided party. House Democratic leaders promised to join Johnson's Republican allies in a parliamentary maneuver to block the effort to remove him as Speaker. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg.
events, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, stocks, little change. Not much movement in stocks. This is before Fed Day. Investors kind of in this wait-and-see approach to find out what happens later at 2 p.m. Wall Street time. As far as the Dow, it is up 0.1%. The S&P 500 down 0.2%. The NASDAQ is little changed. The 2-year yield at 5%. That's down 2 basis points. The 10-year yield at 4.66%, and that's down 2 basis points. To commodities we go. Right now we have a spot. Oh, where am I? I don't have my commodities up. All right, we'll get that on the next one. We'll get that
WTI
one
crude oil off 1.7% to $80 a barrel.
We're almost under 70 at this point.
There we go. All right, earnings. That's another
$3.50
big
at the
point.
Wawa.
Thank you, John Tucker.
Thank you, John Tucker, with the congestion pricing report, too. CVS Health, that's where we're going down 19%, really taking a hit. It lowered its yearly earnings outlook for the second quarter in a row. Then we have Pfizer. On the flip side, they're up nearly 2%. Raised full-year guidance earnings, first quarter earnings sales also beat estimates. That is your Bloomberg kind of business flash. Paul and Alex.
Totally counts, Lisa. Totally counts. Yeah,
Team effort.
We're all here. We're doing the thing. I'm Alex Steele alongside Paul Sweeney and Lisa Mateo and John Tucker. We are live from Interactive Broker Studio right here in Midtown Manhattan. This is Bloomberg Intelligence Radio. We cover all the news in economic and financial world with our top analysts over at Bloomberg Intelligence. They cover 2,000 companies, 130 industries around the world. They're honestly probably the smartest people that we talk to in this business. Anurag Rana is one of them. He's Bloomberg Intelligence Senior Technology Analyst, and we're talking Amazon. So that stock up doing pretty well. It is up by about 3.3%, having a nice surge yesterday when reported after the closing bell, and was all because of cloud sales growth and AI demand. Anurag, what was your big takeaway from yesterday and the call?
Yeah, I think the big spike in AWS profit is something that really alarmed us because, that was a number we weren't expecting for, honestly, a few years. So if you look at it, AWS margins, operating margins came close to 37, 38%, little over 37. And that was like 8 points or 8 percentage points higher than what Street was looking for, and 14 percentage points over last year. Absolutely phenomenal. I think that's really what I am hoping that investors are focused on, rather than all the other things.
All right, Anurag, give us a sense, if we just step back, for those of us that aren't cloud aficionados, give us kind of the market share layout. How does this market look between some of these big players like Microsoft and Google and Amazon?
So Amazon only plays on the infrastructure layer, which is trying to give people raw material to build their applications. And with that, they have a commanding market share, over 40% of the market. And in fact, they have maintained that for a while, which is surprising because Microsoft has been gaining share on it for a very long period of time, but from smaller players. And also the market's growing very much. So Amazon's currently at, revenue of over $100 billion in this market. But overall tech spending is, north of $2 trillion, frankly. So there's a lot of room to grow for everybody, not just Amazon, but Amazon, Microsoft, Google, even Oracle. All of them will grow in this market.
So if we take a look at the different layers of how AI kind of plays into cloud, the one area where Amazon maybe isn't getting as much market share, and maybe they're still developing that, is the consumer-facing side. What can they do there? What is their growth opportunity there?
Yeah, they have a lot of, I would say some apps that are working on it, but really the reason why Microsoft is ahead right now in that game is because of OpenAI. They have a partnership with OpenAI, and they run OpenAI's backend, which is when you do a search on ChatGPT, Microsoft is running those searches in the background, or the application runs on it, which is why Microsoft is getting the benefit of it. For AWS, the big benefit is going to come from companies or big corporations when they go out and build their AI applications. There's a high likelihood they're going to choose AWS as much as they're going to choose Microsoft or Google, and that's really what Amazon's betting on.
So you mentioned the margins, high margins at AWS. Can they maintain those margins? What are the risks for those margins?
Yeah, I don't think they can maintain them, only because they have to spend a fair amount of money in order to reduce, fulfill the demand, expanding in data centers, buying new hardware, buying chips. So I'd be very surprised if we see that number again for a very long period of time. and frankly speaking, I'll be happy with a 30% margin for the next several years while they make sure that they're doing the right investments to drive double-digit growth rate on their top line.
Let's talk about those investments. So they said they're going to, quote, meaningfully step up their CapEx to pay for all this AI infrastructure, but there was no number given. When Meta said that, the market didn't like it. What was the pass here that Amazon got?
Yeah, but Amazon's basically showcasing that they actually have been doing this successfully in terms of expanding data centers based on the capacity. So, before going in, they had close to $15 billion yesterday in the first quarter in terms of CapEx, and it's going to go up over the next quarter. So we think it's going to be north of $65 billion at this point for all of Amazon, with most of it going to AWS. But there's a reason for it. They are getting contracts to fulfill cloud demand, or they need to be able to expand that to fulfill that massive cloud demand.
Anurag, you know what I did not see yesterday in the release? A dividend. What's up with that? They got like $60 to $80 billion of free cash flow.
Yeah, I mean, again, they're going to spend that $65 billion next year on CapEx also. So I'm okay with not having a dividend for a while. I would rather.
But you're a tech analyst. You guys think that if you put out a dividend, it signals that you're no longer a growth story.
Yeah, it's a kiss of death. I'm not a big fan of it.
It's not. Microsoft, Google, Apple, they disagree with you.
Yeah, IBM kind of agrees with me at this point on that. I mean, but
yeah, go ahead.
Yeah, so look at IBM. I mean, they have a massive dividend yield. I would rather they take that money and buy a bunch of new HashiCorp kind of companies that are growing at 15 to 20%. That will change the face of the company, make them even more relevant in the tech space than they are right now. So I'm always in that camp that when you are a tech company, you gotta constantly reinvent yourself. Otherwise, somebody will come and eat your lunch.
I mean, Anurag and I, we just fundamentally disagree on this. We agree to disagree. We go to our separate corners.
Can I ask a dumb question for the two of you then? Is there room for both of you to be right? Like, can these tech companies throw off enough cash that they can reinvest in a healthy way and also pay a dividend?
Yes.
Anurag?
Yes, absolutely, Alex. I completely agree with that. Because what happens is if you give a very small token dividend, it opens the doors to a lot of institutional investors that are bound by their charter to only invest in companies that pay a dividend. So there is a logical reason to do it, but I'm okay with Amazon's going to take a year or 2 years to get to that path.
All right, so there's a world where you can both be right.
There's a place where we can meet in the middle.
Is there a CapEx number that you wouldn't like from Amazon? They didn't give a number.
No, not at this point. The only reason is because we see forward contracts. As of this morning, when they filed their 10Q, we saw cloud commitments go up 29%. I mean, that's a very big number. And frankly, when on the enterprise side, we haven't even seen orders coming for AI at this point. AI orders are only coming in from consumer applications like ChatGPT, people running that at this point. Over the next few years, we should see a massive spike in people creating new applications or companies creating new applications, and that's going to only drive more growth for AWS, Microsoft, and Google.
Anurag, I just punched in Microsoft here. I'm surprised that the stock's only up 5% year to date. I thought it would have been more. It just seems like everything's going their way. What's the Microsoft call here?
Yeah, if you go and look at all these big companies that are supposed to be the big beneficiaries of AI in the long run, they had a phenomenal last year. I mean, you just can't deny it that the last 18 months have been really good for the entire tech space, whether it's Microsoft or NVIDIA or Amazon. So I think there's just that digestion phase at this point to see how things end up. There's an election coming. The interest rates are going up. So there is a fair amount of uncertainty out there that how will demand shape up in the second half and next year.
Okay, we have 30 seconds left. Apple, tomorrow, what's your number one thing?
Good question.
Yeah, the only things I want to hear is China and stabilization, and then I'll be sleeping happily. I mean, other than that, it's going to be a bad number for Apple.
Are we going to get that? China and stabilization?
Well, we're going to get a disappointing number from Apple, but again, as Anurag was just saying, it's all about China.
Right, but also, can you stabilize versus increase, I guess, would be the distinction. Hey, Anurag, great stuff. We appreciate you. I am sure we'll be talking to you tomorrow as well. Anurag Rana, Bloomberg Intelligence, a senior technology analyst joining us on Amazon as well as Apple. Do you think if they have China not growing but flat, that would be good enough?
I think if I were an investor, I would be happy with that, because my concern is it's a secular declining market simply because they're losing market share.
Yeah, all right, good point. All right, we're going to have much more coming up within the next hour of Bloomberg Intelligence. We are going to be speaking to Herman Chan of Bloomberg Intelligence on New York Community Bank. This is Bloomberg.
Company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Amazon's cloud unit posted the strongest sales growth in a year. That was thanks to AI demand. CEO Andy Jassy has been pushing for it, backing big investments in AI services. Shares of Amazon are up more than 2%. Dan Ives is a senior equity research analyst at Wedbush Securities.
This was a trophy case quarter for AWS, 17%. I mean, whispers were 15%. This is exactly what Amazon needed to do to show that the cloud mojo is back. Very important quarter for Jassy and Amazon.
Now, despite the strong cloud performance, the company's sales forecast for the current quarter fell short of estimates. Consumers just watching their spending. Yum Brands, well, they noticed that pullback in consumer spending too. The company behind KFC, Pizza Hut, Taco Bell, they saw sales fall for the first time since 2020. Their shares down more than 2%. And Starbucks, well, they saw it too. Bloomberg's Kriti Gupta has more on that.
Their first sales drop since COVID. Right at the beginning of the earnings call, you had the CEO say this was a disappointing quarter. They are putting out a new breakfast menu, but they're dealing with some intense competition story over in China as well, plus some of their growth markets not really performing.
while Starbucks shares, they're down 16%. And a similar story at Kraft Heinz. The company reported a steeper than expected drop in organic volume in the first quarter. Net sales also trailed estimates. Kraft Heinz down about 6%. And New York Community Bancorp opened its books. Charge-offs and provisions for potential loan losses, well, they declined in the first quarter from previous 3 months, but its results, well, they were better than expected after a really tough quarter, and that's pushing those shares higher. They're up 33%. Marriott, they reported first quarter earnings that missed expectations due to softening demand growth in the U.S. Right now, Marriott shares are down about 0.7%. That is your company news at this hour. I'm Lisa Mateo.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. Happy Hump Day. Happy Fed Day. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top analysis with our great analysts of worldwide 2,000 companies and 130 industries. We also bring you all the news you need. Here's John Tucker for world and national news. John.
All right, Alex and Paul. Police moved in last night to shut down the epicenter of pro-Palestinian campus protests. This was the scene at Columbia University in Upper Manhattan last night.
If you refuse to disperse, you will be placed under arrest and charged with disorderly conduct.
The NYPD moving in shortly after 9 p.m. using a ladder truck. They entered an upper floor of Hamilton Hall where the protesters had barricaded themselves inside. Occupying the campus building seemed to be the final straw for university officials and Mayor Eric Adams. He says the NYPD and Columbia identified a substantial number of people who took over Hamilton Hall as outside influencers and agitators mixed in with students.
There are people who are harmful and are trying to radicalize our children, and we cannot ignore this.
Well, that was the scene in New York and Los Angeles. Police responded to a request for help at the UCLA campus early this morning. Clashes broke out at a pro-Palestinian encampment after the university declared it unlawful. And while those campus protests continue across the nation, 3 more university presidents being called to Capitol Hill to testify about anti-Semitism. The presidents of Yale, UCLA, and the University of Michigan will appear before the House Education Committee on May 23rd. Clinics, patients, and abortion rights activists in Florida are bracing for the impact of the new law that will transform the state overnight from one with the fewest restrictions for the procedure in the South to a place where it will all be banned. The 6-week abortion law signed by Governor Ron DeSantis last year and confirmed by the Florida Supreme Court earlier this month takes effect today. And Harvey Weinstein due back in a New York courtroom today for his first appearance since an appeals court last week overturned his 2020 rape conviction and ordered a new trial. The hearing in Manhattan expected to include a discussion of evidence, scheduling, and other matters, according to Weinstein's attorney. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul and Alex.
All right, John Tucker, thank you very much. Here's a fascinating article from Bloomberg Business Week.
I'm knee deep into this article now. It's fascinating.
You're down the hole on this one. This is basically looking at how AI is helping automate some jobs, and these are very specific jobs that one may not want. Apparently, you're looking at remote-controlled droids herding cattle, for example, prepping shipments and stacking pallets at meat packers' plants from coast to coast. They can also do things like vaccinate in-egg chicks at the start of their lives, and they can also help process meat and chop off meat from the bone in a very specific way that you don't erode those margins.
It's unbelievable here, and what I'm reading through this thing is it's really the labor-intensive part of the food business is kind of the slaughtering and the carving, the butchering of the animals. And that's where technology has not to date been able to do it, because it really is. You have to have kind of, arguably, the humans have to figure out where to cut and what, because every animal, particularly cows and hogs, are different in weight and size and things like that. Chickens, apparently, as I read this article, they're making very good progress here, and they're saying about 2/3 of the jobs done in some of these chicken places are actually done now by robot, and that's up just since the pre-pandemic.
Chicken killing robots?
So
chicken carving robots.
So
butchering,
listen. So Tyson has developed a sensor and camera-equipped robotic chicken breast deboner that's more efficient than the average worker using their hands. High-margin task that they have usually struggled to entrust with robots, and now they can do it. So they're deboning. So it's robot deboners.
And apparently, what I'm learning in this story, and I'm looking at the pictures here, one chicken's kind of like the next chicken, apparently, in size and shape and all that kind of stuff. Not the same.
Not to the chicken.
Yeah, not to the chicken.
So many
but
ways.
apparently, cows and hogs, not so much. There can be differences in weight and size. So they're having a harder time kind of standardizing it, I guess. I don't know. Fascinating article. If you're anywhere near the Bloomberg terminal or Bloomberg.com, check this article out. AI is helping automate one of the world's most gruesome jobs. There you go. Thanks for pulling that up.
I don't know where to go from that. Yeah. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Herman Chan, Bloomberg Intelligence Senior Analyst for the regional banks. Usually we only talk to him when there's like a disaster and one of these regional banks breaking up, but that's not the case today. We're just going to talk to him about what's happening in the world of regional banks. Priya Misra, how about this? Fixed income portfolio manager, JP Morgan. She's going to join us here to talk about what she expects from this Federal Reserve and kind of how JP Morgan Asset Management is putting money to work in the fixed income business. And then Jody Lurie, Bloomberg Intelligence credit analyst, joins the program to break down Marriott earnings. And I'm also going to ask her about the cruise business. Viking.
Of course you are.
Viking just came public.
Oh, that's
the
right.
River Group. Someone check on her about that.
Has it started trading yet?
I think it was yesterday, so we'll check in on that. But right now, let's kick it all off with Mr. Charlie Pellet.
Hi, thank you very much, Paul and Alex. Here's what's going on. We're looking at a mixed market here ahead of the Fed decision, 2 p.m. Wall Street time, right to the numbers here. S&P lower by 8. That is a drop now of just about 0.2%, with the S&P at 5,027. We've got the Dow higher now by 93 points, up by 0.2%. And the NASDAQ Composite Index down 13, drop there of just about 0.1%. 10-year, 4.65%. The 2-year, 5.01%. Spot gold up 0.8%, up another $18 the ounce at $23.04, while West Texas Intermediate crude lower by 2.4%, below 80 briefly there. WTI 80.01 right now on West Texas Intermediate crude. This Bloomberg Business Flash brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.com. Visit insight.bnymellon.com. Again, insight.bnymellon.com. So again, what should we be expecting at 2 o'clock Wall Street time? Max Kettner is Chief Multi-Asset Strategist at HSBC Bank in London. He was interviewed this morning on Bloomberg Television.
I think we're all pretty desperate on getting something exciting out of the Fed, but let's be honest, when we look at, for example, what the Fed did 5 months ago, this dovish pivot pretty much out of nowhere, right, out of the blue, it would be very, very strange if they boxed themselves in now to basically saying, okay, the next move might actually be a hike. So I do think, we're going to get probably something that sounds more hawkish relative to the last meeting, but relative to market pricing.
Max Kettner of HSBC. After earnings, Amazon up now by 2.3%. After earnings, Starbucks shares, they are plunging down 16.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. And just to update, Viking has not opened yet, but it's indicated to open at 26.28. It priced at 24, so could be
Has
pretty
Charlie
good.
Pellet been on a Viking cruise? I don't know.
I'm in the process, believe it or not, of booking my first European Riverway cruise, subject to vacation time this summer. But, Paul, I like cruising because I like the big shows. I like the casinos. I like hanging out on the deck. I like the buffet. River cruises have none of those. My wife has a big vote in where we go and what we do. And I'm not opposed to a river cruise. Not opposed. Never done it, though.
Okay.
Well, these are important things to know.
Yeah,
about,
I
Charlie
cruise the
Pellet.
Nile or the Danube or something like that.
Totally cruise that.
Or believe it or not, Vietnam, Cambodia, those are big as well.
I've been to Vietnam. Yeah, I would definitely do that. Yeah, I have. There are lots of stories from that. Okay, market stuff. We're doing it. So, okay, you're looking at markets not really doing that much into the Fed meeting, but Norma Lynn is looking at all the details because we've had tons of earnings earnings out. Yesterday was like 11% of the S&P, right? And today it feels like it has not let up. Norma Linda joins us from Bloomberg News. What is on your radar?
So much going on. Looking at CVS. Now, this is the biggest laggard in the S&P 500 right now by percentage. Those shares are plunging as much as 20%. The company is seeing its worst days since 2015. Quick math, that's 9 years. It cut its annual earnings outlook for the second quarter in a row, and it's really pointing toward increased medical costs in its Medicare insurance business. It not only lowered its forecast for cash flow from operations by $1.5 billion to at least $10.5 billion, but it also revised its adjusted earnings for the year. It was supposed to be at least $7 a share, but that's down from at least $8.30 that it had previously here.
Yeah, and we've seen this from all the other insurers, too, that are exposed to Medicare, right? Like, basically, older people are getting more procedures post-COVID and doing stuff, and then you got to get reimbursed.
Exactly.
That's kind of the problem.
Exactly.
Okay, you were also looking at Pinterest. Is this correct?
Yes, this is Pinterest here on the flip side. We are seeing these shares in the green, surging as much as 21%. That's the most in almost 4 years. Its first quarter sales and user growth surpassed Wall Street expectations. Revenue rose 23% to $740 million in the 3 months that ended in March. And this is all coming from a push into shopping and a focus on Gen Z. Right here.
Is that you?
Yes, that's me.
I don't even know what Gen I am right now.
Good question. I wish I was better with all the different, all the different age demographics and what those are. But I do know that I'm Gen Z, and apparently we are helping with the push into shopping, and their focus on that group in particular has really helped the company propel itself along.
Well, good job.
Are you a pinner or whatever they're called?
Ever so often. I like to get some recipes on there. I think Pinterest has really great recipes, especially if you're looking for some healthy ones. They can do really quick, healthy options. Also shopping.
Yeah, for sure. Decorating. I have a lot of a board.
So you do Pinterest?
Yes.
See?
When I'm decorating, like when we moved, I had to get all the things and
inspiration.
And Pinterest board. I'm Gen X, by the way. I work.
There we go.
Samantha loves Pinterest.
That's
wow.
Yeah.
News you can use. Okay.
News you can use. And Starbucks, on the flip side, we established what Paul likes to drink, but we haven't established necessarily where the bottom is here for some.
Yes, so we are seeing Starbucks, as you mentioned, further down. It's seeing its worst day since March of 2020. Those shares are plunging as much as 17%. Now its sales fell for the first time in 4 years, and this has investors spooked. It does seem as though it cutting its, giving out half-off deals as well as rolling out some new drinks. It really hasn't done as much to entice consumers as it would have liked. I did want to pop in and say my favorite drink. I like the salted caramel Frappuccino. Extra caramel drizzle, extra salt. I have a sweet tooth.
Wow.
Why don't you just go eat candy?
I might as well, right?
Yeah.
I have to conjugate that order.
That is
almond milk. Can't forget the almond milk.
God forbid you use the
lactose intolerant.
real stuff.
I was like, you gotta healthy it up, you know.
Who's lactose intolerant?
Lactose intolerant here.
I do like the almond milk there. It's true. But Paul, when you and I
get milk out of an almond?
Yeah.
Apparently,
but it uses a lot of water. It's true. But if you can
All right.
reduce it, that's the whole thing. Is that particularly if you grow it in California, there's a water shortage and stuff, and it's like not the best thing for the environment in that respect. But you can also maybe decarbonize it, find different ways of recycling the water.
Okay. Can you just milk a cow?
Or you can just milk a cow.
Or you can do that.
If you want to do that whole thing with your extra tall mocha something.
Right.
Double short mocha.
The double short.
What is a double short?
Extra
Just
shot
make
of
it tall.
I think you made it up.
I want a smaller. I don't drink
Me,
that.
I want like the biggest thing you can possibly give me.
Yeah, exactly.
The venti? Or don't they have a
venti?
A larger than a venti? I heard there's an extra size.
Double venti, extra large. I don't know. I'm making that up. Okay, anyway,
I
thanks a
believe
lot,
you.
Norma Linda, joining us there with her Starbucks order, which she will just go eat candy after that. NYCB, New York Community Bank, that stock is up a whopping 32%. I said up, not down. Let's just be very clear, up. They posted results that were better than expected. Executives also outlined a plan for transitioning the company into a more diversified bank. And Herman Chan is Bloomberg Intelligence Senior Analyst for U.S. regional banks. As Paul mentioned, we usually bring you in here when things are bad.
Right.
Things are good. This
Things
was
are
good. Walk us through what we learned today.
We learned a lot. So they gave a path forward. Remains to be seen if everything's going to go in lockstep to their expectations, but they basically said they're moving to a 3-year plan with a transition to be more of a commercial bank and expecting any sort of credit issues to be mostly cleaned up this year with an earnings loss for the year, but things seem to be, it was enough for the stock to react to this 3-year plan because it was trading at 0.4 times tangible book value, which is well south of what the regional bank peers are at 1.1 times. So it was a low bar, and they cleared it pretty healthily.
Okay, so just a review here, their risk was to rent-controlled apartments in New York City, a very focused business they were in.
Very niche.
Are they exiting that business? Are they fixing that business? How are they going to make things right there?
The part of the 3-year turnaround is de-emphasizing that multifamily rent-regulated piece. There's $30 billion of those loans now on the balance sheet. They can't get rid of them because there's not going to be a lot of buyers, and if they would have to sell, they take a big discount and take a big hit to the balance sheet. So they're just going to manage through it. They've been building their loan loss reserves on these over the past couple quarters. So they've built up their reserves to pretty much in line with peers, but that's one of the unknowns is how credit quality is going to perform going forward in a higher for longer rate scenario with respect to these rent-regulated loans.
There was an article at the Bloomberg today that talked about how rent-stabilized apartment buildings are actually, the rent's going up. And if you sign 2-year leases, the top can be like 6.5%.
Right.
When I was in a rent-controlled apartment, it was like 0.5%. Like it was really, really low. Are those kind of increases enough to really help the likes of a New York community bank?
Yeah, it helps. But a lot of the issues that these borrowers, these landlords are facing is higher debt service coverage ratios and higher operating expenses, right? Because if you have to, gave an example, if you have to replace an HVAC unit, that costs 30% more than it did 2 years ago. So all of these operating expenses pile up, but then you can't raise your rents to commensurate with your higher costs. So that's the issue, and the higher rate issue where they have to refinance at higher interest rates.
So rent-stabilized apartments, I've never been in one. Do they not just rise on the rate of inflation, or are they really fixed?
No, it's fixed.
Well, that's a tough business to be in if you're a landlord, isn't it?
Right, it is now. And there was a change in the New York state laws that really capped how much the rents can go up every year. So we're seeing the repercussions of that for banks like New York Community.
So I lived in one 20 years ago for a while. I had a 2-bedroom apartment, huge, on 183rd Street. And I paid $850.
Wow.
And it saved me. Like, there's no way.
May I ask just why you would give that up? Aren't those things you keep in your...
I got married.
Okay.
And my husband owned his apartment, so that was just better.
Ooh,
yeah.
Interesting.
But the dream was that it would go co-op or something, and then I could buy it for crazy, crazy cheap. But also there was no incentive on that end to fix it up. It hadn't been fixed in forever and 20 years, and the kitchen was horrendous. But there's no incentive to spend money to do it, to just then raise your rent a nominal amount, because it's sort of like a utility, right? You can only raise it a certain amount, even if you put a certain amount of work in, then you can raise it a little bit more, but it's not a huge profit generator from that end. But man, that was nice.
That was nice.
I had a lot of closet space. So when they talk about you know it for diversification, right? They want to be a diversified bank. What does that mean for them?
Yeah, what that means is they want to tilt more towards business lending, commercial lending. They talked about their business portfolio is about $20 billion. They want to grow it over time to be $30 billion. And the new CEO who came from One West, who was former head of the OCC, he alluded to the fact that they're going to hire more folks that he used to work with in the past to really build this commercial lending franchise. But the issue is that they're losing your existing commercial bankers, your folks that are focused on deposit inflow. And these are former Signature employees, and they talked about losing 35 teams out of 134 or so. So you've got folks leaving, but then you got to refill them. So there's a lot of work to be done there.
All right, let's step back and take a look at your coverage in general, the regional bank coverage. I'm looking at the SPDR S&P Regional Banking ETF, down about 7% this year, but up about 20% on a trailing 12-month basis. What's the call out there when you talk to institutional investors? Is it Can we buy these things?
Yeah, the low was in October, and you've seen banks come back a little bit. What's helpful is that the banks are talking about troughing net interest margins and net interest income, so that's good to see, and they expect a improvement in growth in the back half of the year. Really, to us, it really hinges on what the rate backdrop is, and if rates are going to be higher for longer, the optimism that bank management teams are talking about for a back half return of loan growth maybe just won't materialize as well as they currently expect. So there's a lot of questions if we do get that second half resurgence, but bank management teams are talking about it. On the other side, we still haven't seen the shoe to drop on the credit quality front, and really the strong and resilient economy has really helped that front. Remains to be seen if things really do deteriorate, then you're going to see a pickup in charge-offs as well.
Are deposits moving anywhere? So I have a Citizens Bank a couple blocks from my house, and I'm seeing a 5% CD, man. Right. I'm not getting that at Citi.
Right.
Are we seeing deposits move?
We have seen stability. So in the first half of last year, when we went through the regional banking turmoil, there was a lot of deposits that were leaving to go to the Bank of Americas and the JP Morgans of the world, especially the large corporate deposits where they thought it would be much safer to be in a too big to fail bank. Banks have recalibrated their pricing, like you talked about the 5% CDs. So that's helped stabilize their deposit base. And
that's a large payout. Like, that's not going to be nothing.
Right. That's not going to be nothing. But the good thing is that overall, with short-term rates now pretty much stable for the past several quarters, the banks have been keeping their deposit costs fairly manageable, so we're not seeing that big jump in costs that we saw last year after SVB's failure.
All right, my personal proxy for a quality regional bank is M&T Bank, your former employer up there in Buffalo.
That's right.
Stock's up 6% year to date. In order for that name to really work, is loan growth the thing I need to focus on? I need to see loan growth for this one to work?
You need to see more confidence in loan growth and also their asset quality. So the potential knock on them is they tilt more towards commercial real estate exposure just because of their historical leanings. They've been trying to reduce that over time, but they do screen higher on commercial real estate. So if we get more stability there and less loss content, then that stock can really work, even though the valuation's still higher than your typical regional bank.
Herman, good to chat with you.
Yeah.
We really appreciate it. He looks so relaxed and happy.
Exactly.
You see the difference?
Totally.
Herman Chan, he covers regional banks, senior analyst for Bloomberg Intelligence. And don't forget, guys, we have a Fed special that is definitely coming up. We're going to talk to Priya Misra also coming up from JP Morgan Asset Management on her take in the bond market. You know, I've been asking for a while for the 10-year. Do we see 3% or 5% first? I wonder if I have to bump up the high end to 5.25 now?
Yeah.
Maybe, since we're kind of doing a decent job of nearing 5?
Yeah, I remember Ira Jersey a week or so ago saying, just from a technical perspective, on the 10-year, 4.71% was kind of a resistance level. You get above, then the next one might be 4.95% here. So a little bit of pressure here on the upside. We have the yields pulling back just a little bit here today, off about 2.5 basis points, 4.65% on your 10-year. I'm calling out Bitcoin off 5% today, 56,800. I mean, I don't know what's going on with those crypto things, but the thing was at $73,000 in mid-March. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, the S&P, NASDAQ, both trading lower. Traders are refraining from making big bets out of the Federal Reserve decision. 2 o'clock Wall Street time. Our coverage 1:30 p.m. here on Bloomberg Radio, Wall Street time. And, of course, Jay Powell's all-important news conference today. That begins 2:30 p.m. Wall Street time. So here's where we stand. We've got the S&P lower by 17, 5,018 right now on that index, down 0.3%. The Dow up 82, up by 0.2%. The NASDAQ Composite Index down 0.4%. 10-year 4.65% with a 2-year 5.00%. Spot gold up $17 the ounce, up 0.8%. 23.04 right now on gold. West Texas Intermediate crude down 2.8%. 79.63, and cannot ignore the move in Bitcoin today, dropping 5.2%. 56,739 on Bitcoin. News about Tesla. Its top human resources executive, Ali Arabello, has left the company, joining a handful of other senior leaders that have recently departed. Tesla shares now down 2.2%. And MasterCard, among the many companies reporting earnings this morning, it cut its forecast for revenue growth this year and spending on the payment giant's network missed estimates. MasterCard down now by 1.2%. Recapping, stocks mixed ahead of the Fed, 2-year yield 5.00%. I'm Charlie Pelleton. That Paul Sweeney is a Bloomberg Business Flash.
Charlie Pelleton, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So you head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. Of course, it is Fed Day today. We'll hear from the Fed at 2 p.m. Wall Street time conference with the reporters at 2:30. Bloomberg Complete coverage on Bloomberg Radio and TV at 1:30 p.m. Wall Street time. Let's check in with somebody who I think is going to be paying attention to this meeting. Priya Misra, Managing Director at J.P. Morgan Asset Management, joining us from New York City via Zoom. Priya, thanks so much for joining us here. I guess what we've heard from a lot of people today that Alex and I have been chatting with is the expectations are pretty low here, that the Fed's going to try to stay a steady course here. Any chance that they maybe kind of go off script a little bit and maybe be a little bit more hawkish than maybe they had been?
So I think they have to mark to market, meaning in January and March, Chair Powell said he'd like more confidence, or the Fed would like more confidence before they can cut rates. They haven't, or none of the data should give them more confidence. So I think they have to acknowledge it. I would argue Chair Powell's already acknowledged that. I think repeating that and keeping the market the market's already priced that in. We've taken down the number of cuts that the market was pricing in for this year to now about 30 basis points, much later in the year. So the market's already, I think, priced in a Fed that should not have had more confidence to cut rates. I think reiterating that should be relatively neutral for the market. I think what I'm watching is, does Chair Powell show that we need more time, that the Fed needs more time to get that confidence? Or is his belief that the disinflation process is still underway, is that belief a little challenged, or is he losing faith in that? I think then you can see a much bigger reaction, because if the Fed starts to get nervous that monetary policy is not restrictive, hikes come back on the table. And I think then no market is really priced for that. I think risk assets will really struggle if the Fed is talking about rate hikes. I don't think they're there yet, but there's a press conference, and I know he's going to be asked that question. And if he sounds a little more nervous about the hot inflation readings, I think then the market's absolutely going to pay attention.
What is appropriately priced then? If you're looking at a 10-year, I'm at 4.65%. You're looking at a 2-year barely above 5. Are these the right levels? What do you do here?
So I think if rate cuts are still on the horizon, and they could be later this year, they could be next year, I think the rates market's actually very well priced for that. I would actually argue that at 470 on the 10-year, we're near the peak. If the Fed is not going to hike any further, I actually think owning some duration, we've stepped in a little bit. We're a little long duration looking for levels to add to that. So, I think rates then would be near the peak. If the Fed suggests that they may be taking rate cuts off the table, or heaven forbid, talking about rate hikes. I think then absolutely rates can rise some more. You can breach that 5% level. But as long as they are dangling that rate cut carrot in front of the market, I think, even if it's a little further out, I think actually rates start to look fair to cheap. Look at all-in yields. Investment grade corporate, you're getting 6%. Securitized credit, you can get 7-8%. I mean, you're looking at equity-like returns in fixed income. So as long as we're not talking about rate hikes and cuts are still on the horizon, I think fixed income makes sense. You just have to be careful. You know what risk you're taking in terms of credit. But, I think rates should be near their peak.
And that's kind of where I want to go, Priya. I was just wondering when, pros like you, when you start thinking about credit risk and maybe taking on more credit risk, because I think about the performance in the fixed income space in 2023, against at least my expectations, the best performing asset class was U.S. high yield. So I'm wondering if I should be taking some credit risk here.
Sure. We've been adding credit risk really since late last year. Once the Fed suggested that they were done hiking, that's normally a good sign for risk assets as well as duration, as long as the fundamentals are strong. And that's where I think if you rely on research, we have a ton of research analysts looking at fundamentals of the company. You talk about high yield, the company fundamentals of high yield, of investment grade, are very strong. I mean, there are those companies that are struggling, but being extremely careful about the business model, about the balance sheet of, even high yield. I think high quality, high yield makes sense. We've been adding that risk. I think the other thing we watch are flows. And we've had significant inflows into fixed income. Net supply of fixed income has not been that high. Companies have been issuing paper, but really to refinance their debt, their upcoming debt. We haven't seen the re-leveraging up of the corporate sector. It's something I'm keeping an eye out for, because spreads are tight. If companies start to re-lever, I get a little more nervous. But you look at the supply-demand picture for high yield, for investment grade corporate, it's strong. Company fundamentals are strong. That would be an argument for, as long as the soft landing continues, economic data remains strong, the consumer is strong, I think owning some credit risk, makes sense. Owning some duration risk closer to that 4.75% level starts to make sense as well. So I think both of those risks are attractive here.
Priya, one of our YouTube viewers just kind of wrote in and said, is that the Empire State Building out your window, or is that like a screensaver kind of zoom thing?
Well, right now it is a screensaver, but once our building is up...
Oh, no, I thought it was real.
Once the JP Morgan building is up, I'm hoping, probably not from my office, I stare at screens all day long, but I'm sure there will be views from that
You're going to get some great views. And by the way, we're going to do a remote broadcast from down there when that building opens.
Oh, that's exciting.
Yeah. So.
Okay, cool. All right, Priya, if you take into account, you mentioned sort of taking on the credit risk, et cetera, how do we think about all the supply that's going to come on in terms of where you may take duration risk, where the credit risk then lies? And I say supply, and I mean from Treasury, but also in terms of issuance on the corporate side.
Sure. So a lot of corporate issuance has happened. I think there's been significant pre-funding earlier this year. So we are looking for less corporate supply on a gross basis into year-end, particularly as we go into the election. But I think as we look at the spread curve, and I'll get to the rate curve in a minute, but the spread curve is pretty flat. So we like owning the 0 to 5 year part of the spread curve, just because, to take on more additional credit risk, just not getting paid up enough. So, if the spread curve steepens, I might look further out, but I would say 0 to 5 year. When we talk about the Treasury curve, and that's where we have a lot of supply, and there's no pre-funding. There's going to be Treasury supply as far as the eye can see for multiple generations, given our deficit outlook. I think there it's important to think about what does the Fed do? And given our view that the Fed is likely to start to cut rates, we think in the third quarter, a couple of times this year, a few more times next year, I think that 0 to 5 year is attractive. But given that the cuts don't seem to be imminent, I think the 3 and 5 year is a little more attractive, because the negative carry of owning that 2 year is high. So I would say owning 5 year duration and 0 to 5 year credit, that's really, I think, the sweet spot in the fixed income space right now.
All right, let me bring up an old issue here, Priya. That's the inverted yield curve. We're still inverted 2s, 10s, 35 basis points. And I was taught by none other than Professor Cam Harvey, who kind of penned this whole thing, that usually leads to, like always, a recession. What's going on there with the yield curve?
So the Fed has historically struggled to engineer a soft landing. They did so in 95. I think 2019 might have been another case, except we had COVID, so it's really not really a tested period. But here's why people look at the yield curve and say that that's a sign of a recession, because it's typically end of cycle. The Fed has tightened policy significantly, and then we head into a recession, and the Fed then tries to cut rates to counter that. I think they're trying very, very hard to keep the soft landing going. And that's why the talk of rate cuts. I think they want to take the edge off the market, start cutting rates. If the earlier they start, the slower they can cut. And perhaps that narrow path to soft landing, it widens out a little bit. I think that's why the Fed has been preemptive in talking about rate cuts. They're looking at the progress on inflation and saying, as long as we get a little bit more confidence, we can cut rates. So even though the inverted curve might imply a recession, I think if, and it's a big if, inflation stabilizes or goes back, bumpy road, but goes back into disinflation, and the Fed starts to cut rates a little bit, they're going to ease financial conditions enough to keep growth going. And I think then that path, you can get that soft landing, even in an inverted curve.
All right, Priya, we appreciate it. Thank you very much. Good luck with the view. Priya Misra, fixed income portfolio manager at JP Morgan Asset Management, is standing by. All right, coming up, we're going to have the topic that Paul's literally been waiting 5 hours for, and that's Viking. It still hasn't opened. It looks to be on the high end at $28. We're going to break that down with Jody Laurie. In the meantime, here's John Tucker with National News.
All right, thanks to Alex and Paul. A police response to the pro-Palestinian protest at Columbia University. Hundreds of NYPD officers went into the school last night, storming a building. Demonstrators had taken over and arrested dozens of people. Mayor Eric Adams telling MSNBC outside groups are taking charge of the student protests.
There was no way I was going to allow those children to be exploited the way they were being exploited. And many people thought that this was just a natural evolution of a protest. It was not. These were professionals.
And clashes broke out on the campus of UCLA. The LAPD called in early this morning. Pro-Palestinian and pro-Israel demonstrators began setting off fireworks and hurling objects at each other. This is the Los Angeles school declared the pro-Palestinian camping on campus unlawful and in violation of UCLA policy. A 6-week abortion ban taking effect today in Florida, replacing a previous restriction of 15 weeks. Michelle Quesada is a spokesperson for Planned Parenthood in Florida, says the ban will have an immediate impact in the state.
We're looking at tens of thousands of patients that are either going to have to travel hundreds, if not thousands of miles to another state with access, or be forced to carry a pregnancy against their will.
The closest abortion clinic for someone living at Florida's southernmost tip will now be a 14-hour drive away in Charlotte. And the New York jury in former President Trump's criminal hush money got some accounting testimony yesterday. Michael Cohen, former banker, told jurors that the so-called fixer took steps to avoid scrutiny from bank officials when he created a shell company in October 2016 to pay Stormy Daniels $130,000 for her science. The jury taking the day off today. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg.
news, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We continue to look at a mixed market. The Dow higher, S&P, NASDAQ, they are both lower right now. 10-year, 4.64%, with that 2-year, 5.00%. We've got the S&P down 9, lower by 0.3%. Dow Industrials up 125, higher by 0.3%. NASDAQ lower by 32. That is a drop now of 0.2%. Cannot ignore the move in Bitcoin today. We got Bitcoin now down by almost 5%, 56,925 on Bitcoin. Spot gold up $21, up by 1%, 23.08 for an ounce of gold. West Texas Intermediate with a 79 handle now, 79.36, lower right now by 3.1%. 2 p.m. Wall Street time. The Federal Reserve will alert the world to its plans for U.S. interest rate policy in the weeks ahead, perhaps beyond that. And with a preview, here's Bloomberg's Vinny Del Giudice.
Inflation is flaring, and the Fed is forecast to signal no imminent rate cuts. Treasury suffered the worst performance in 14 months in April as Wall Street pared bets on Fed easing. Traders went from pricing as many as 3/4-point rate cuts this year to just 1. Today, the Fed may well signal it could be on hold until next year. Bloomberg Economics says the U.S. Central Bank is at a crossroad. Vinny Del Giudice, Bloomberg Radio.
And, of course, we will have Jay Powell's news conference for you live, 2:30 p.m. Wall Street time here on Bloomberg Radio. Amazon after earnings up 2.2%. Advanced Micro Devices after earnings down by 8.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We get all our top analysts from Bloomberg Intelligence. They cover 2,000 companies, 130 industries worldwide, and we pick their brains for their top ideas and how they dissect all the news. Sometimes we talk to them and ask about how they're cruising and what kind of ship they just went on and what hotels they're in. This is Paul's favorite segment. Couple news there. So Viking Holdings is IPOing today. It's indicated to open out 29 on the high end. It IPO'd at 24, so we're looking at a nice pop. There is that point. The other is Marriott on the flip side. That stock down by about 1%. We're looking at some slowing growth results in the U.S. And there's only one person to talk to about this. Jody Laurie, Bloomberg Intelligence senior credit analyst, is standing by for us. I'm just going to jump to the chase here. Have you been on a Viking cruise thingy?
Viking cruise thingy is very, very descriptive. My parents are actually avid Viking cruisers. They were giving me the rundown of what they liked that was different than the other ships. And it's funny because when you look at the stack that they've been showing investors, a lot of what they were saying made it into those presentations. So they definitely do understand their consumer.
That is impressive.
Yeah. The no kids. The everything included, no upcharging of additional items. That's sort of their shtick. The one complaint they had was because they are smaller ships, they don't get as much Broadway-esque style theater.
That's what Charlie Pellet said.
That's what Charlie Pellet likes.
Yes,
He likes that part, though.
Yeah, interesting. All right, so when you look at I know Norwegian Cruise Lines reported today, and the stock's down 14%. What did the market not like about what we heard from Norwegian?
So Norwegian's one that we've said has been playing catch up to its peers, right? So even though management is targeting having 1.5 times less leverage than a year ago, and they're really sort of sticking to that, and they've been showing signs of improvement from a debt perspective as well as from an EBITDA generation perspective, I think there's sort of a question about whether Norwegian can sort of sustain this momentum that a lot of their peers are seeing. And I think that there is a cost element to the story that they are trying to address, and that's where they're sort of getting the additional margin, but there's only so many costs that you can cut, and there's only so much you can push onto your consumer, and I think that's the concern that we have.
So then if you pair that with then Viking, it looks to indicate to open now at 29. Is that the right indicator? Like, is that the right price in comparison?
Right. So from the equity perspective, I will yield to my colleague, Brian Egger, who has done substantial research on that I've contributed to as well. But his analysis, I think, is pretty sound in terms of public comparables. That said, if you look at Viking versus Norwegian from a debt perspective, they have lower leverage. They are a little bit different sort of business model. I mean, Norwegian does have lines that compete with Viking, but Viking is primarily those smaller body ships. They have the ocean liners, which are only 900 plus people. They have their river vessels, which are 100 or so people on those ships. So pretty small in comparison to their peers. Now, if you look at Viking's vessel amount, it's, 90 plus vessels that they have now. And so that's a really big difference from Norwegian's 30 or so that they have at the moment. And that comparison, I think, is pretty substantial when you think of how the companies fill their ships, how they market, how they sort of look to sort of keep their customers coming back.
Jody, I'm just looking at Norwegian's balance sheet. It seems like they have a lot of debt and vis-a-vis their EBITDA. How do you guys think about that?
Yes, so we've written, Paul, a few times about their debt, and we sometimes like to look, at least for Royal, Carnival, and Norwegian. This is a little bit different for Viking, but Royal, Carnival, and Norwegian, we like to sometimes just do a debt-to-vessel comparison. Debt to vessel. The reason being is you want to see how much of their assets are actually backing, or how much debt per vessel they actually have outstanding. And if you look at Norwegian, it's significantly higher. Now you pair that with the EBITDA, and debt to EBITDA is higher at Norwegian. Historically, they have not been investment grade. They now have since turned their ship and said that they want investment grade like metrics. They've said that over the past year, whereas Carnival and Royal have historically been investment grade pre-pandemic and continue to want to be investment grade rated. And I think that will change the dynamic significantly if and when they can achieve that goal.
I'm on the Viking. I'm down the rabbit hole of the Viking cruises. So but I've totally been listening.
Exactly.
I want to go to Marriott before we let you go, though. I mentioned down 0.8%. First quarter results showing some slowing U.S. growth. What was your takeaway here?
So I think something that's being missed by Marriott is that they actually revised upward their EBITDA projections for the year. And they've been talking about the difference between U.S. and Canada versus international. And I think that fits with what we've said in our survey, is that a lot of consumers want to do overseas travel, or they're thinking about areas other than the US, and they're thinking of those lavish vacations, right? And I think that that's sort of fitting, plus the fact that they are seeing tailwinds from business and conference travel in the US. And so those pieces sort of fit with what we've been saying, is that we might have normalization coming into this year as it relates to the U.S. consumer, but we still are seeing these tailwinds because we've had this lagger of business travel and conference travel. And I think the international piece is the interesting one, because when you pair that with the cruise lines and you say, okay, if people are going internationally, what are they doing? They're flying out to XYZ location, staying in a Marriott, and then going on a Viking cruise. That's how you can kind of think about it. That said, you sort of wonder the geopolitical risk, if that's going to be an issue. And we've seen in our survey results, only a few months ago, we saw that personal safety was a high contributor to people's anxieties as they go overseas.
So just real quick, I'm looking at the balance sheet of Marriott. I think I like it. It looks kind of like 2.5 times net debt to EBITDA. Am I reading that right?
Yeah, so Marriott likes to keep low leverage, and they like to access the commercial paper markets. So the commercial paper markets are a way for Marriott just to fill cash gaps, and they've definitely been very friendly with them over the past year since they've been able to access them. They need to have a mid-BBB rating in order to access the commercial paper markets. And I think that they're going to continue to say that they want the investment grade rating, which is what they said today's call, because they want that additional ability, so that, for example, we're now having an issue in the US and Europe when it comes to commercial lending for their hotel owners, right? So the hotel owners are going out and building new properties. They're working with regional banks. If the regional banks are having challenges of any kind, then Marriott steps in and sort of helps to finance in some way, or helps to sort of provide the ability for these owners to build their new properties or convert the properties to different brands. And so I think that's the interesting component to what Marriott's been saying the past few quarters, is that they've been monitoring the ability for the owners to access the financial markets.
Jody, great stuff. Really appreciate it. Jody Laurie, Bloomberg Intelligence Senior Credit Analyst. Such great analysis. But Viking, back to that.
Yep.
Indicated to open at 29. I don't know. This could be my type of cruise too.
Yeah.
I mean, I have a kid, so there's that. But other than that, like no fees, no nothing. Like it looks really nice, but not cheesy.
Yeah.
Road trip.
Road trip.
I mean, I think we got to test it out. This is Bloomberg Intelligence on the road. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. CVS shares plunging right now, down 17.2% this morning. CVS said adjusted earnings for the year will be at least $7 a share, down from the earlier view of at least $8.30. Rival insurers, including Humana and United Health Group, that sell Medicare Advantage plans, private versions of the U.S. government health programs for seniors, have warned of rising costs as members seek more treatment in COVID's wake. Again, CVS, worth repeating, down 17.1%. Humana up 3.8%. Shares of United Health Group up 0.6%. Amazon's cloud unit posted the strongest sales growth in a year, a sign that the retailer's most profitable unit is recovering from a slump as businesses resume spending on technology projects, including artificial intelligence services. More on the quarter from Mandeep Singh, senior tech analyst with Bloomberg Intelligence.
If you parse through the AWS numbers, clearly, they had a sequential acceleration in AWS growth, and the margin expansion was actually quite prominent. My fear over here is they didn't give us enough specifics to kind of have a run rate on generative AI. Yes, it's multi-billion, but how does it compare to Microsoft's, 7% contribution to growth?
Mandeep Singh of Bloomberg Intelligence. Amazon shares up now by 1.6%. Another prominent decliner today, Starbucks, after earnings, down now by 17%. Starbucks sales fell for the first time since 2020 as half-off deals and new lavender lattes were not enough to entice increasingly budget-conscious consumers. We've got shares of Starbucks down now by 17%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. Happy Hump Day. Happy Fed Day. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from the Interactive Broker Studio right here in Midtown Manhattan. Also check us out on YouTube as well. Right now, I want to go to John Tucker for world and national news. John.
All right, Alex and Paul, campus protests in New York City leading to hundreds of arrests. The tally, approximately 300 arrested by the NYPD last night after officers moved in with force to clear Columbia University and the City College of New York after fires were set, some vandalism carried out, and at Columbia, a building was taken over. Mayor Eric Adams at a news conference making a clear distinction.
There was no way I was going to allow those children to be exploited the way they were being exploited. And many people thought that this was just a natural evolution of a protest. It was not. These were professionals.
And clashes broke out on the campus of UCLA. The LAPD called in early this morning. Pro-Palestinian and pro-Israel demonstrators began setting off fireworks and hurling objects at each other. A 6-week abortion ban taking effect today in Florida, replacing a previous restriction of 15 weeks. The National Right to Life president, Carol Tobias.
I'm very excited. About 50% of all abortions occur after that point in pregnancy. So this bill is going to save a lot of lives.
The closest abortion clinic now for somebody living at Florida's southernmost tip will be a 14-hour drive away in Charlotte. Last year, more than 84,000 people got abortions in Florida, more than in almost any other state. Many of those patients traveling from other states in the South. The Biden administration says it's going to cancel $6 billion in student loans for people who attended art institutes. That's a system of for-profit colleges that closed the last of its campuses in 2023 amid accusations of fraud, saying the chain lured students with pervasive lies. The Education Department invoking its power to cancel student loans for borrowers who are misled by their colleges. Baseball buzzkill in the desert. That gave Arizona Diamondbacks fans a new hero. At the start of last night's game between the Diamondbacks and the Dodgers, it was delayed about 2 hours after a bee colony swarmed the top of the protective netting behind home plate. Matt Hilton, you never heard of him. He's the manager for Blue Sky Pest Control. He turned into the star of the night for going out on the field, removing the bees. So he earned a brief slice of stardom and got the nod to throw out the ceremonial first pitch.
But he also had a song. Didn't he have a theme song associated with it? What did they put out there?
I don't remember.
His walkout song?
No, there you go. It's a walkout song.
Walkout song, yeah.
Anyway, I think that story is actually really cool.
So, you know, when animals behave badly, you don't always have to kill them. Just remove them.
That's such a good point. Thanks for sharing that, John Tucker.
Yeah, animal lover.
You don't need to kill the animals.
I'm being political. I'm sorry. Global news, 24 hours a day. We'll just end it right there. Alex and Paul.
Thank you, John Tucker. Invest in your face is my theme.
Yes.
If you listen to this radio show, this is what happens. You invest in your face, then you don't have to inject things in your face.
What a face you have.
Why, thank you so much. I'm actually 85. You just wouldn't know. But Estee Lauder is like countering this a little bit for me. So shares are down as much at one point as to almost 20%. We're looking at the biggest decline since November of 2023. The beauty company cutting its full-year sales forecast. Their earnings guidance for the fourth quarter fell well short of consensus estimates. They cite, quote, ongoing macroeconomic headwinds, including continued softness in overall prestige beauty in mainland China and geopolitical volatility in some areas around the world. But also, U.S. sales weren't great either.
Yeah, I'm just looking at the PGEO function on the Bloomberg terminal, and you can see where the revenue comes from for all these companies. In Asia Pacific, it's about a third of their revenue. So if they're having weakness in China, you're going to see that in the numbers there. But Estee Lauder, where does that fit on the relative quality scale?
That's good.
Yeah,
that's solid. Yeah, I mean, it's Clinique. for example. Well, they have lots of brands, but like Clinique would be one that would be familiar to you. It's like, it's a little, it's not drugstore brand, it's better brand, but you don't have to pay an arm and a leg for it. And you know, America's sales came in up just 2.6%, so slightly beat estimates on the revenue side, but you know, still it's a slowing kind of idea, and it makes sense. Like if you're not going to go to Starbucks, if you're not going to go to Yum Brands, if you're not going to go to KFC, are you actually going to do that?
Yep. All right, very good. Balance of power. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's Fed Day, and the White House is listening. Welcome to the fastest show in politics as we wait on word today from the Federal Reserve with economic and, yes, political implications. We'll set up the announcement in just a moment with Molly Smith at Bloomberg Economics. Marjorie Taylor Greene says she will pull the trigger on the motion to vacate the speaker next week. We'll have a live report from Eric Wasson on Capitol Hill with more as well today from Bloomberg's Ian Marlowe on hopes for a ceasefire in Israel. And later, our conversation with Congressman Earl Blumenauer of Oregon as the government moves to reschedule cannabis. So let's light it up. Rick and Jeannie are with us this hour, and so is Charlie Pellet. As we start things off with a look at Wall Street, let's go to New York. Hey, Charlie.
Well, hello there. Indeed, 2 hours to go, just under until we get that FOMC decision on this Fed Wednesday. We got you covered, both with a decision and Jay Powell's news conference coming up at 2:30 Wall Street time. That'll be the big story today. Right to the numbers here, because we've got the S&P trading lower. Mixed day with the S&P down now by 22. Drop there of 0.4%. Dow Industrials up 87, a gain now of 0.2%, while NASDAQ is down 97. Drop there of 0.6%. Bottom line here, traders refraining from making big bets ahead of the Fed decision. Officials poised to signal their rate cut plans do remain on hold. So the 10-year, 4.65%, with the 2-year, 5.01% on that 2-year. Spot gold up 0.9%, 23.05 the ounce. West Texas Intermediate crude down 3.4%, 79.17. Crude falling now with a 79 handle, and Bitcoin dropping now by 5.2%, 56,736 on Bitcoin. So just under 2 hours away from the Fed decision, Matt Hornback is global head of macro strategy at Morgan Stanley.
As long as inflation continues to move back towards 2%, I do think, which we think will be their baseline for